Welcome back, everyone. It's Michael LeBlanc, Director and Senior Portfolio Manager at Canaccord Genuity, and this is our live weekly market update that we do every Tuesday at noon. So thank you, everyone, for joining us. With this week, we're starting September. It's September 8th, so we're starting the fall season, which tends to be a bit more active as far as news and market conditions. Summer months, especially August, tends to be a bit slow as a lot of people, well, generally are away. Probably not so much this season, but still probably a lot of people traveling within province from what we've seen, and the data shows a lot of people trying to get their last summer weekend in before things head off back to work. Kids going back to school. This week, I think the province starts on Thursday. Some school started this morning. My youngest is grade 12, and he went back to school this morning. So, knock on wood, we see a good outcome from there. Obviously, a lot of concern around the kids and teachers as we attempt to reopen here and get the kids back into classes. Universities are starting last week and this week. So, and then of course the concern over the fall second wave. So we're going to be staying on top of all that in the coming weeks, and we'll keep you up to date as much as possible. As always here, the information that we cover on this is really just source material. Don't take it as advice. You always have your own specific plan, and that's what we're going to be talking about today is our financial plans. So always review with a professional your plan and how any of these strategies or information can help you, or do your own due diligence before acting anything in your portfolio. We try to keep everything up to date, but information does change quickly, and you should take into consideration your personal situation. As always, you can ask questions. Just click on that Q&A button. You can type a question in, or you can email us or give us a call. Go to mikeonmoney.com if you need to reach out to us. You can book an appointment there. All our different social media. We do these videos, as we mentioned, live every week, and then we do a deep dive every Friday where you can find those that we publish out. And then also just let us know what you think of the videos. Let us know if there's something you'd like to see or other topics you'd like us to cover. We're always happy to hear from you and get your feedback on how we can improve these or make them even more to what you're looking for. So with that, let's dive into things. Coming up this week, we're looking at the new U.S. employment report. As always, every week we tend to talk about employment in the U.S. and in Canada. It's a really key indicator, of course, of economic growth. And we've been watching it since the pandemic hit. And we're going to continue to watch it as the new weekly reports come out. So that's always kind of going to be on the top of priority of what we're looking at. And of course, Canada's got some labor force data coming out for August as well. So we'll keep a close eye on those to kind of see how we're positioned going into the fall here. Over the last couple of weeks, we've mentioned the U.S. Coronavirus cases had been declining as not the total cases declining, but the total number of new cases were declining over the last couple of weeks, which was a good trend. There's still a lot of hot spots in the U.S. that are a concern, but unfortunately, going into the long weekend there, we saw that reverse. And very likely in the next week or so, we'll see that increase again as, of course, Labor Day weekend had a lot of people out in close contact, and that's just going to drive the numbers up a little bit. And then, of course, we're going to talk about some of the economic news that we're seeing around the world. As you know, there was some real damage done to global economies. And we're wading through that and seeing how things are recovering. So we'll stay on top of that. And you know, the big debate on testing continues. You know, everyone seems to be focused on the cure as opposed to testing and taking the measures. You know, more research come out, more news comes out. Nothing surprising to anyone who's staying informed about any of this. is testing and, wearing the mask, keep staying social distance is, the solution. The cure, there's a lot of talking about, more and more talk about the vaccines coming out or being developed. And you know what, the reality, I know we've talked about this before, but I think it really has to be expressed over and over again to make sure people's expectations stay in check, is even if we should come out with a vaccine sooner than later, which would be amazing, it's going to take time to distribute. I think that's starting to become a reality now, as in the US. And of course, we've seen Russia start their rollout, China talking about their rollout, and the US getting ready for theirs. Canada's also got some prep in there. But, the reality is, even if we had a vaccine tomorrow, it will likely take anywhere from 1 to 2 years that the whole population would be able to get vaccinated, or that it would be available for the whole population. Of course, there's going to have to be a planned rollout, your first responders and frontline workers being prioritized, and then of course the elderly, and then they'll start working through the general population. So keep that in mind. Again, I'm not trying to be negative. I think things are going well. We do see vaccines moving through the testing phases with very promising results. But so just to keep that reality check there, that, there's a lot of talk, over the next 2 months, we're going to be inundated with U.S. election news. And of course, there's the talk about the U.S. government trying to get the vaccine out prior to the election date. And of course, even if one was ready by then, and so far, there's no indications from the science community that one will be ready by then, mass distribution probably just no chance of happening. So keep that in mind when you're reading the news or anything around the vaccines. Really what we want to focus on, testing and social distancing, right? Just being respectful of everyone around us. So with that, let's dive into some things that are going on. U.S. market equities had surged. We talked about this last week. We saw the market hitting some new highs as the U.S. equity prices continued to rise in valuation. Little concerning, given that the economy really hasn't, gone up at all. It's much lower. The economic health is obviously lower than February when we went into this. So, the disconnect with the market rising, and also a lot of that really geared around technology. Technology obviously has gotten us through the pandemic, and a lot of the technology stocks have rallied, well beyond kind of their underlying valuations, given that surge to the market. So some talks of a new tech bubble potentially forming, obviously a concern. We've talked about trimming, taking some profits out of your tech positions, or any positions really that we've seen big rallies in over the last little while, heading into the fall, because we could see a bit of a shift where the markets come back into line with the underlying economy. And I think one company to that really highlights that story is Tesla. Great story, great company. It has its issues, it's had its ups and downs. We actually have done a deep dive video into this coming out shortly. And go to our channel and check that out. But it's the stock, from just a year ago, about $250 all the way up to $2,500, on really no strong economic news around the company. I mean, it had some growth in there, but of course it went through the same shutdown as all other car manufacturers. It had the same drop in sales as all the other manufacturers. So really nothing to have driven up it that high. So just keep that in mind when you're out there investing, especially around the technology areas. Be cautious when it comes to valuations. We also saw opposite to the stock markets last week. We saw the fear gauge or the confidence index spiking to a high, indicating potentially a market crash. Now, I don't think we're really, when we say crash, we are expecting a downturn in the markets because it has gotten ahead of the underlying economy. But crash, I think, is a strong word. We've talked about, we've done videos on asset allocation or how to invest during this period. We've talked about, just a moment ago, talking about selling off some of our winning positions or at least trimming some of the profits we made in that and have that cash available to take advantage of a market pullback here. Not really promoting market timing. This is just wise tactical asset allocation, taking advantage of the pullbacks when we see them. And we'll dive a little bit more into that as we go through the presentation here today. So Bank of Canada is revisiting their inflation target, and we saw this in the U.S. a couple of weeks ago. So this is just the U.S. Fed and the Bank of Canada, in ways of keeping inflation in check and ways of keeping the economy growing. Will adjust the interest rate. Of course, they both cut the interest rates very, very low. Almost near zero going into the pandemic in order to stimulate the economy, to pump cash into the economy to keep it moving. And at some point, they're going to have to start raising those. Normally, it's driven purely by, or most part, by inflation. And we are starting to see inflation. Anytime you see that much money being printed by countries, you're driving up inflation. We have several other factors because a lot of countries are also printing money. So given our currency is pegged against other countries, that will change our inflation rate a little bit. But we are seeing inflation. In fact, those numbers are coming up this week. And the Bank of Canada and the US Fed are just going to be taking a much more cautious approach. They don't want to solely bring the interest rates up on early inflation, as they don't want to stall the economy as we recover out of this. So we'll get more information on that as they put out more guidance down in the weeks to come. Other headlines: U.S. job growth has slowed down. Right. Basically, we been talking about it for the last couple of weeks. We saw that surge of new jobs coming out after the reopening. That is slowing more than we're seeing in other countries, especially in the U.S., but probably because they're staggered opening and closing, some different places, and because the continued outbreak down there, we've seen some companies just not reopening or shutting their doors voluntarily or limiting their reopening because of the extra outbreaks down there. So not overly surprising, but that job growth is not going at the speed that the U.S. would like to see, and we'll probably go into the election with one of the highest jobless rates ever going into an election. U.S. disasters causes a double whammy on insurances and companies. Of course, not only do they have the continued pandemic in the U.S., the wildfires in California and the flooding in the South are causing more problems than usual for businesses and individuals. Not just the pandemic, but of course, how do you isolate when you're in the middle of evacuations? Trying to get people to stay apart, but at the same time trying to get people into buses and into shelters as they do all the evacuations. So big problems down there, and of course that's even harder with the insurance companies, with people's companies being devalued going into this, so the insurances aren't paying out as much. Just problems that were hard to foresee, especially given the nature and the fires kind of hitting them at the same time. As we talked about, the U.S. stock market surged, maybe scary for September. Halloween season's always coming earlier and earlier. And in fact, since we started, we looked at the data from last week, we have seen the markets turn sharply in the last few days of trading. Of course, it was closed yesterday, but Thursday, Friday were down, and today's down as well. So we've seen a sharp reversal in the growth. Most of it so far is people taking profits from the recent run up, but the economic news as we go through here, you'll see is not negative, but certainly not as positive as the market was showing as far as valuations go. And with that, the federal government may ramp up corporate debt purchases. This is just to keep liquidity in the market, make sure that companies do have a spot to sell their debt. It doesn't shore up pricing, it just ensures liquidity for companies. As we look at every week, the numbers out there still growing. On the world level, we're 27,500,000 total cases, just shy of the 900,000 on the death side. So quickly approaching the million number. It's insane to look at these numbers every week and how quickly we're growing. The U.S. almost 6.5 million total cases. Through the 190,000. 190,000. 3,657. So, we mentally always, look at where the next milestone is, and you can't believe the next milestone is 200,000. I remember at the beginning in all of this, and I'll have to go back and look at some of our early videos when we were looking at the world total number of cases at 200,000. Now just the U.S. alone, the total deaths are approaching 200,000. It's scary numbers indeed. And in Canada, of course, we were through the 9,000 last week, 9146 this week. Still doing well on a world basis here in Canada. Obviously, some concerns as we have seen some spikes in the numbers. BC especially, Ontario are seeing some spikes as they do the reopening, and in Quebec. And obviously with the back to school happening, the numbers can do nothing but go up, and it's just a matter of how much, and then hopefully we can keep it in check as much as possible. So let's take a deeper look into the markets. As we mentioned last week, we did have early in the week some positive numbers out of the markets, and then we ended lower. As mentioned, we saw a lot of selling in the technology areas. As those overvaluations started to get hit, people started to move out. And we mentioned last week that the treasuries had gone into the negative, and they shot a little bit up last week on unemployment numbers being a bit better than expected, but still that flat line curve. The US dollar, which has been declining pretty steadily, was pretty much unchanged last week, which was good to see them stop their pullback. And gold prices edged up while we saw oil fall on weak demand. And last week we saw the demand numbers come out year over year for August, and it was about 15% lower in the US for demand. And we did see a little bit on the upside to oil last week as some of the production was closed down for the hurricanes, but the demand numbers were lower than they were expecting. So we saw oil pull back a little bit. Coming up in the U.S., we're getting the consumer price index, or your inflation numbers, out for August. We expect them to rise, of course. We've seen them steadily rise since the government stimulus packages have gone into effect, and there's no reason to think why we won't see a steady rise there throughout the end of this year. So August's numbers are expected out later this week. And also the weekly jobless claims numbers for September is due on Thursday. So we'll keep an eye on that. But as mentioned, that's flattening. The trend is flattening there. And we might even see a dip, which would make sense based on what we're seeing in the underlying markets there, and that's where the markets will probably adjust to reflect that in the coming months. We're also seeing the openings and the labor turnover surveys coming out. I mentioned Canada's. We're expecting their survey out this week as well. So we'll keep an eye on that, as really the economic recovery is going to be driven by the employment numbers and how many people are getting back to work. In the U.S., Trump administration's unveiling an aid for the airlines. So this is this is maybe a long time coming, but it's not just the airlines themselves. If you think about the overall economy, really a lot runs off of travel, whether it's business travel, people working at the airports, the fuel, we talk about the oil and gas industry is really driven around, um, uh, airline fuel as opposed to cars, as far as a percentage of sales. So, there's a lot more of this aid package is a lot more than just bailing out the airlines. It's really an investment in the economy, trying to again reignite it as quickly and as much as possible. So we'll look to see that. Johnson and Johnson, we talked about their trial in the U.S. that they were doing 1/3 minorities, and now they're moving to a global trial, and they're looking for again, kind of the harder hit countries, Latin America, for test subjects to volunteer as they test their vaccine in order to make sure it's available to everybody. So good news there from Johnson & Johnson. Goldman Sachs and Morgan Stanley had to readjust some of their bank health stress tests as the U.S. government, so the Federal Reserve, had made an error in their June stress test. So not a big adjustment. Nothing overly affected. As we mentioned, we do like the financials. We do like the banks. Still a little bit early, I think, to put too many dollars towards that sector yet, as we're still waiting for those post stimulus, post CERB numbers to come out to give us a better indication of corporate insolvencies and loan losses that the banks will have to take. So not a big effect there. U.S. Rural Telecom Networks is looking for $1 billion or almost $2 billion from the federal government, as the U.S. had banned the use of Huawei and ZTE equipment, and this is part of the trade battle that the U.S. is having with China. And of course, they, as low cost manufacturers, especially some of the smaller telecoms, had used their equipment prior to the ban, and now they're looking for help in paying the cost of replacing that. So not even the newer equipment, but just the cost of removing that and putting something new in. We're also seeing a reevaluation of Microsoft's JEDI proposal. So I'm not sure if you remember, this goes way back, or a while back anyway, that Amazon was questioning a cloud contract with the US government worth $10 billion that was taken away from Amazon and given to Microsoft. And some thought maybe that had something to do with Trump's relationship with Jeff Bezos, the head of Amazon, given that Amazon also owns the Washington Post, which doesn't always write favorably about Trump. So there was concerns of conflict of interest in moving that contract. And they just completed a comprehensive reevaluation, and they're saying that the $10 billion contract to Microsoft was actually still, despite any thoughts like that, was still represent the better value for the government. So it doesn't look like anything will come from that. In Canada, no major events, just the job numbers that we're looking at. We added in August, we added more jobs. Still, what we're seeing in Canada is similar to what we're seeing in the US. Some slow gains. The percentage gains has slowed down a bit from that initial surge. Not unsurprising. And hopefully we can avoid any further shutdowns here in Canada and see those job numbers continue to improve. As we mentioned, it's really vital for the economic recovery that we get people back to work. And also Canada, if you've been following, a lot of our stimulus packages and help corporations has been around shifting more and more to clean energy. And even in the oil sector, they're looking at using hydrogen to actually get the oil out of the oil sands. So using hydrogen to cut down emissions and make the process cleaner to get the oil out of the ground. So Alberta is making a big push to use more and more hydrogen in that process, as opposed to using fossil fuels to actually get more fossil fuels. So try more and more shift to cleaner energy. On the exchange front, on the currency front, euro declined a little bit versus the US dollar in recent days. A lot going on in Europe. Again, economic news a little slower than expected. Of course, they have the whole Brexit situation. Their job data is coming out, and the dollar or the euro weakening a little bit against the US. And of course, we saw the US flat last week. So a little bit of movement along there. The disappointing U.S. job data will probably take the euro support away as the U.S. That flight to safety might drive the U.S. dollar a little bit stronger. Currently sitting at Canadian dollar sitting at 75.82. On the commodity front, we mentioned oil having a weaker week after things reopened back down in the south of the U.S. Demand has been down since those numbers come out, or since the demand numbers come out. We're still seeing weakness. Again, no real strength or indication of a longer or a sustainable recovery in the oil sector, and we're not really looking at that happening. Actually, I saw reports on new wells, new rigs being drilling for more oil, and there was one in all of North America last month. So no real expansion in the oil front down there. So what we're talking about this week is how does all this affect your financial plan? And I've stressed many times through the pandemic, the importance of the financial plan, why you want to have it, things to look at. We even did a whole video on really putting some thought into your financial plan, more than just the numbers in a lot of cases. And I want to take a moment just to talk about financial plan and if you have a financial plan, what you should be looking at. If you don't have, you should definitely take a look at it, and here's some tips to consider. If you have any questions, first of all, if you have any questions, reach out to us. Go to mikeonmoney.com or fire us an email or call us. Happy to answer any questions regarding a plan. It's so vital, we always do that disclaimer at the beginning, don't take any of this as advice, because really your plan dictates your investments and how you should position that portfolio. And without a strong, well thought out plan, it's almost impossible to do the investments correctly because you really don't know what you're trying to achieve with them, or what type of risk you should have in there or not have in there in order to get where you're going. And I really think, talking to a lot of people over the last several months, this is a great time to sit down with your plan and really, even if everything is exactly the same as it was before, that's great, but it's really good to go sit down and review every aspect of it. Think about what your goals mean to you, and have they changed through this? Because some people's have, depending on where you are. So just some things to consider is go review your will and make sure your power of attorneys are there. Can't stress those enough. Those are such important documents. Power of attorney, if you don't have one, you never want to have to use one. But if you don't have one in place and you need it, you can't do it afterwards. And the power of attorney, of course, is signing the ability for someone to act on your behalf should you not be able to, right? So if something happens to you and you're not able to take care of your finances or manage your real estate or just anything, you need that power of attorney in place. And once you're incapable of doing that stuff, you're obviously incapable of signing the power of attorney. So really important you have that up to date, and the person that you've assigned that is still the correct person. Of course, here in BC and Ontario, we have representation agreements. And that's, you know, some people call them the living wills. That's for your health aspect of it. You know, you can do that at the same time, and that's giving people the basically the power of attorney, but instead of finances, it's for your health. They're two separate documents. So if you want someone to have a health decision for you, get that document done at the same time. Wills, again, they should always be read about every 3 to 5 years. Might be 0 changes needed in there, but it's good to just read it through. Make sure it's still set up the way you want. You know, it's still up to date as to the assets and accounts that you've named in there. Do you need any changes or anything? And review your executors. You know, as we age, our executors are also aging. So it's a bit of work to be an executor. Is the person that you named the correct person? Are they up to it? You know, are they still living? It's always best to have your executor living in the same province as you, certainly in the same country. You know, it's not impossible for someone to act as executor being out of province, but it does offer up some additional challenges. So always something to consider is to review who that executor or executors are. Are they the right person or people? And does that need to be updated? Debt. I mentioned earlier, just moments ago, we were talking about, you know, interest rates being at almost 0, that, you know, all-time lows. If you have any debt, is it worthwhile, you know, renegotiate that? Maybe trying to take advantage of these lower rates out there. If you've got a mortgage or, you know, anything that's not floating. Of course, if you have floating interest rate, it would have adjusted down already. But should you lock that in, right? Take advantage of these low rates. So, you know, that can be a big part of your financial plan, is getting rid of debt and take, you know, try to take advantage of that. Now, if you own maybe a family cottage or cabin, or certainly if you own a business, you might want to consider an estate freeze. So this is where you kind of lock in the tax rate. You know, just simplify. Obviously, estate tax can be a little bit more, freeze can be a little bit more complicated than this, but basically you lock in the tax rate at today's value. And certainly if you own a company, you know, with the COVID shutdown and everything that's going on, the value of that company might be lowered right now. Doesn't mean you want to sell it right now or you want to get rid of it right now, but you might want to lock in that rate and obviously lock in that lower tax rate. If you, it's similar with if you have a cottage or anything like that, there's a tax bill due on that. You know, you could consider freezing that value and kind of paying the lower tax bill now versus a higher tax bill down the road. So a lot of things to take a look at whenever we go through these, especially when it comes to the estate planning side of things. And then reassess targets. So, you know, this could be, you know, maybe through all this, you decide you want to retire earlier. Maybe through all this, you decide you want to spend more, spend less, travel more, travel less. Just again, doesn't mean you have to make any changes to your plan, but just rethink about it. Make sure that, you know, everything that you have been planning for or are planning is still valid and there's no changes there. You know, I've talked to a lot of people on different camps. People, you know, are excited about you know, when to get out and want to travel more. And then I've talked to some other people who, you know, are really reassessing things. And remember, especially when it comes to retirement goals, really keep in mind you know, what you're going to do. So I mentioned, you know, planning's not always number crunching. Planning's, you know, lifestyle. What do you want to spend your time doing when you retire? You know, there's always 2 camps in retirement: the I'm bored or I don't know how I managed to fit work in. Always like to hear people say they you know, can't remember how they had enough free time to actually work in retirement. So and that's the people that, you know, they've thought out or you know, they had an idea of what they wanted to do. So really reassess those goals. What do you want to do? Or if you're in retirement, do you want to continue to do what you're doing now? Do you want to make changes? Just reassess it. Obviously talk with your family, your partner, if that's part of the goals. make sure everyone's on the same page, and really, think through how that's going to affect things, and that, confirm those long-term goals, that's what you still want to do. And if it is, great. Again, even when it comes to potentially downsizing or moving to a new area, just confirm that, yes, that's what, it's going to still make sense for you. You're going to be happy with that. Talk to family, obviously, if you're going to be further away, or maybe you're moving closer, but have discussions about that. Insurances, if you have life insurance or disability insurance or any kind of insurance, just confirm you've got the right ones, confirm you've got the coverages you want, and the amounts make the right sense. Is it something you should be looking at as part of that estate freeze or estate planning aspects? Do you need it all? If you are going to travel, maybe confirm that you're covered for COVID, and if not, what that will look like cost wise, and maybe your insurer doesn't offer it, and you've got to look at something new. There's a lot of things to consider into consideration given the new realities that we're dealing with. I know, talking about travel, even in our family, we love to travel, and have traveled as much as we could. And one of our spots is to go down to Cabo in Mexico, and we traditionally would go the first week of January before the kids go back to school. And this year we're looking at it. The likelihood of being able to go safely anyway is pretty low. And so, we have to relook at things like that, and really put some thought as to, when are we going to be able to safely travel? Because again, it's not just us being healthy, or Canada doing well. We have to consider the destination as well. And even places like Spain and France, Spain particularly, which was really hard hit on the first round, are starting to see their numbers spike up again here in the fall. So, when is that going to happen, or when we'll be able to take advantage of those things again, has definitely changed. And I've focused kind of on the retirement goal, but there's other goals out there. There's, whether you're saving for your kids' education or your grandkids' education, time to really, look again, reassess things. Obviously, schools are very different out there right now. Surprisingly, we're seeing cost increases, especially at universities, despite them not offering in-class teaching. And having two kids, or one kid in university and one about to go into university, I can tell you it's really tough. We've done a deep dive on that. I think it's coming out this week on Friday on kids' educational plans. So give that a watch, give that some thought as well, if that's part of your plan. Make sure you're looking at all your goals, and just review. Again, doesn't mean you have to change anything, doesn't mean you have to put any effort in other than sit down and just go over all the aspects, make sure everything's still correct. Take some time. If there are changes to be made, take the time to do it. Contact us. We're happy to review it with you, reconfirm anything that you need to confirm, or run some potential changes through your plan and see what that looks like, and make sure everything's still on target. But just important to give it some thought during these times. And it's also a great time to really, there are a lot of positives that you can change in there. As I mentioned, the debt side of thing, the estate freeze idea, or even just, putting some new plans in place if your views have changed. So with that, I'm going to let you guys go until next week. Again, we have a video coming out on Tesla. We've got the educational one coming out as well. You can find those on our YouTube channel. If you're watching this on a replay, just go to mikeonmoney.com if you want to get a hold of us, or fire us an email and call. As I mentioned, we're always happy to hear from you. And maybe someday I will not be doing this from my little home office. We'll be back in the office shortly. We're going back in 1 or 2 days a week now, as we have limited access to the office as we slowly look at return to work. Anyway, with that, stay safe out there, everybody, and I'll talk to you again soon. Thank you.